All right, guys, what's going on? It's Josh, and today I'm going to talk about a few reasons why the stock market might come down and we might see an economic collapse. This is something a lot of people are interested in and scared of. I fall into that category on both ends. So I thought I would cover it. There's a lot of things going on right now. So, as a trader and interested in stocks and real estate, all that, even Bitcoin, I want you guys to kind of know where you could gear your eyes towards for news and to protect yourself. Now, before I get into that, one, I will always, as I as I always have to say, if you're new, you like this video, it helps. Drop a like on the video, subscribe, turn on post notifications so you don't miss anything, and let me know some of your feedback. We're definitely going to talk about this a lot, and check out the free stock course that we got going on. It might be a good idea to start getting into stocks now, and that may sound contradicting because I'm saying the market's going to crash, but we'll talk about some of those opportunities here later in this video of how you could, use this to your advantage. You don't have to be, and this is why I'm sharing it with you guys. You don't have to be left in the dark. There's not, oh no, market crashes. Is it awful? Yes, but there's a lot of stuff you could start looking for, and there's a lot of stuff you could do to protect yourself and make sure you're kind of on the inside rather than the outside. So there's that. But now, before I get into it, my next disclaimer I'm going to have to say is this isn't going to be imminent. And what I mean by that, it's not going to happen right away. There is some flashing indicators, but there is one thing I want to talk about. And my example, this chart I have on the screen, is really going to explain it with the day and age we're in and how things work. Especially crashes, they take time. If you guys have seen The Big Short, or guess what, if you actually looked at the real market crashes over the years, you'll understand they take time to develop. And just when something's wrong, it doesn't really work like that. I guess I'll say like this: somebody could go broke today, but when is it going to be really felt? Or when is it going to be aware? You could go broke today, you own a house, you could max out your credit cards, then you got to wait 3 6 months before you default on those credit cards. You foreclose on your house, it'll take a year to get out. It takes time. And what I was going to say with this chart, we're going to go look back in time. We're going to look back at some of the other crashes and just some of the other hiccups in the market and explain what happened. But a lot of things that have differentiated, I said in my last video with you don't need to go to college. We live in an information age, but it doesn't change how things operate in the sense of we get information a lot faster, and the stock market, people react to it and things move really, really fast, but it doesn't change what is actually going to happen with the company. Just because we hear about the news that okay, this is going to happen, doesn't change the time frame of when those sales are going to happen and when that. And that'll make more sense when I talk about these. So what I'm going to look at through the rest of this video, we're going to use an example. We're going to look at 2001, 2008, but then we're also going to go back and look at some of the other industries right now and what's going on, what we're seeing politically that is affecting the stock market and has the potential to, and even talking about real estate a little bit, which I'm going to make in another separate video. So let's get into it. Ooh, excuse me. So what you guys see here is this chart of biggest one-day losses in the stock market. Now, again, this Facebook thing that happened, I made videos, I compared it to stuff that happened in the stock market before, Bitcoin, all that. It was very important that you don't really see this. Facebook lost $120 billion in market cap in one day. But now we're going to identify here and look at what happened in 2000 with Intel. But now, take a look at the rest of this chart, starting with the far left with JP Morgan Chase, September 29th, 2008, 24 billion. Citigroup, another bank, September 23rd, 2002. Wells Fargo, man, I keep coughing. February 5th, 2018, and that was because of their whole little fiasco with the accounts, and they got in trouble a lot of times over the year. So that was a news event. But again, February 5th, 2018. Next one, we got Amazon, April 2nd. I think that was just an earnings report. Next, Bank of America, October 2008. Another one in February 18. In the market, again, Bitcoin was crashed. A lot of things were not going good. Google, Alphabet, they went down 41 billion. GE, 48 billion, 08. ExxonMobil, 52 billion, 08. Apple, 2013. And now this is the interesting one because it's really the only outlier that we're finding here. It is related to tech, but what is going on with Apple is they literally they just it's and you're going to notice this story happened from 2000 all the way till 2018. It's when they changed their growth expectations, and in this case they sold Apple iPhones. They beat the sales, they did good, but this was just again an earnings, the future growth got changed on Apple, and that drove the stock down. But a big thing to notice of why, and this is makes sense why Apple did what they did. Apple went and did a split because at this time Apple was a $700 stock in 2013. Then they split and they went down to the $100 marker, I think a little less than that. But this goes to show why companies even do that. Companies that are big caps, that's what Netflix did. They switched from the small float, high market share or high market prices for their stock, and they split it, add more shares to lower the price. They do an equivalent split on that so that the stock becomes less volatile or susceptible to volatility. So Apple has about 4 billion shares now. They went from like 700 to 400 that day. It was crazy. But then you got Microsoft, and then Intel, and then Facebook. But what I want to bring up through here is looking at all of these dates, you'll notice something very, very distinct. There is Apple in 2013, and the market wasn't too hot in 2013, but that is an outlier. It only shows up once. I'm not saying, okay, another date, you take it off, but essentially, you have a very distinct pattern. You're either seeing 2000 or 2002 show up. And, the banks in 2002, and that was just at really the end of the crisis of 2000, 2001. And that's what I want to relate this to, because right now we're kind of entering a market that is very, very resembling 2001, 2002, and that was a tech bubble. The Nasdaq, that was the first time the Nasdaq broke above 5,000, and it was very, very high, and it was a decade-long bull run. A lot of people don't know about that. Is that the market was going up for 10 years, just how we went from '08 to 2018. Now, history does repeat itself. It's not always going to work the same way, but it's starting now. You started to see in 2000 all the way to 2002, you got some of these big signs from the leaders here, Microsoft and Intel, and then again one bank. But there was other companies. Now when you start looking up these dates, April 2000 to September 2000, these were just the biggest one day losses in history. Look at all the other companies coming up, but they started, you saw the big losses happen here, and again another, started in April, then you saw September, but all the way between then it was the Grim Reaper. And you could go look up and see articles from 2000. And what was going on is that tech was really high, and one by one companies started getting knocked off, and we are starting to see that today, where companies like Netflix are taking huge earnings losses. Facebook, GE even gets removed from the Dow. Left and right, you're seeing companies literally just get chopped up 10, 20, 30% in one trading day. And this is really the signs you want to look for when you see big amounts like this or big, drops. That is something you got to pay attention for. And really, what I'm expecting to happen is tech might be an area we might see growth. And even related now, real estate is kind of slowing down, and people are talking about that. But the areas where real estate is really getting hit the hardest, like right now, our market, what we're doing in San Diego and LA, it's not really getting hit that much. Why? Those aren't really big tech towns. But go look at Seattle. Go look at Austin, Texas, and what was the other one? Seattle, Austin, San Francisco. All big tech towns. Crazy inflation in real estate prices. Year over year, they've had about a 33 to 40% increase in inventory. Prices got too high. People are selling. You're starting to see now prices drop there. And again, tech in general is what makes up it. You'd be surprised, even though the S&P is diversified, a lot of these companies are tech. Tech is supporting up a lot of the stock market. There's even valuations of where it would be, but I'm expecting now to see one by one, and this is where I'm not, if you look at 2000 and 2002, the crash that occurred, it wasn't just all in one. It wasn't like 2018 or 2008, where you had that big drop and right after left, things were going down. It was just a bear market. It took about a year, 2 years for the market to just little by little knock off the Nasdaq. Companies were losing and they weren't just getting back up. And that's what I see is that we might happen is that, and we're already seeing people go from growth into value, and the expectations are going back. And that's what happened. Intel, when it dropped here, and Microsoft, both of them, all that happened, it's not like they were losing money at this time. Like Intel had 90 billion loss. It's not like something bad happened like Wells Fargo. It simply was, okay, well, we're downgrading our growth estimate from 6% to 4%, 2%, and they knocked the stock down, and and it literally dropped very, very drastically. So that is what killed it, and they literally said weakened European demand. And there was also issues going on with the euro and the value of the dollar and the euro. So why do I bring that up? Because that's the same thing happening here. You're seeing companies lower growth expectations, and it's not for any other reason. It's not like they're saying we're going positive and negative. We're going from growing to just not growing as fast as we expected. And then now they're blaming, instead of Europe, they're blaming China, or they're blaming tariffs. And then now go look around with the global currencies. And this is what I wanted to talk about, especially coming this week. We are going to see potentially more sanctions on China, more sanctions on Turkey, even some on Iran and possibly Russia again. It is just the sanction environment and protectionism doesn't always work out well for the markets. But in general, now what this is doing, the Turkish lira has lost about 60% in the last like 4 or 5 years, majority of it happening in the last couple years. So you're getting weaknesses there. You're seeing the Chinese yuan hit new lows. What else is going crazy? The Iran dollar, that is just, it's not really traded too much, and it doesn't have too much of effect because of already the sanctions and stuff going on with Iran, but it's not there. But a lot of these global currencies are just weakening drastically. Then you have now the JPY and stuff going on with that in the recent meeting with Japan. But pretty much there's a lot of tension going on, and there's a lot of things changing. You're seeing currency values, global growth perspective shift. We're seeing real estate get inventory, a lot of people selling, and even then, real estate in other markets overseas, London's down about 20%. Canada's starting to show some signs. China is slowing down with buyers. There's a lot of different things going on. But now, so what I'm saying is what to look for. Look for companies dropping off out of nowhere, one by one. Don't really expect to find something happen on a big scale, because these averages are weighted like that. But look for one by one, and it is going to take time. It's not going to happen this year. What I'm expecting is some sort of possible correction to occur, but I think it'll be, short lived, like August 2015, where the market goes down for a little bit and comes back up, and then we start to see more signs of the cracks. There's other factors I'm looking for. I have other indicators. None of them have said the market's there, but again, the market is heating up, and they're trying to slow it down for obvious reasons. Prices are growing too fast. And, there's all this other stuff going on overseas. I think we're at that potential where it's time to start paying attention, and a lot of people have. So what you guys need to do, and what you guys need to do to get ahead of yourself, that's what I was saying, learn about stocks. There's options to make money. And I mean, you could trade options in the sense of finding ways to protect yourself, buy puts, buy insurance. And now again, this is where I've made a lot. I have a video I turned about $2,000 and $250,000, and I have that on tape. I have it recorded. I've talked about releasing it. If I think the time is right where you guys will learn off it, I will. I just don't like to get people hyped up like that and see that. But it's very, very important to know that we could be entering some volatile times, and the timing, the seasonality, everything is getting to that point. So I hope you guys are ready. I hope you guys pay attention. Don't get euphoria, don't get the fear of missing out. Again, doesn't mean you don't play the upside. I'm going both ways. I always like to play, I don't want to, by the time you could call a crash, the market could shoot up 20-30% from there and then crash. But you got to just make sure you're nimble, ready to move, ready to act, and just don't get caught up with, don't drink the Kool-Aid, and find a way to protect your assets and know where you're putting your money, what are your potential risks, and how you're going to lose it. So we'll start there. Whatever questions you guys got, this is a big topic. Anybody who knows me knows I could talk about this for days. There's so many areas we need to explore. So I will give updates on this. But I'm going to leave it there. What I'm going to tell you guys to do, give it to you as your homework. Go look up 2002. Go look up 2000, what caused it, and start to see any time now in history where there's been sanctions and where there's been now tariffs And that's the big thing. That's what I meant. No, I think I said sanctions on China. I meant tariffs. But go look up sanctions and tariffs, and then also anytime go correlate with the stock market, the S&P, the Dow. Anytime we've seen some major countries or bigger countries move with their currency at an alarming rate of 5-10%, go see what that means and go see what that has done to stocks and really how things have played out from there. So there is more stuff emerging markets. Like I said, I'll share it with you guys, but I'm going to leave that there. If you guys like it, subscribe, drop a like, and give me a comment, and let's talk about this. Love you all.